We making moves. We making major moves. We making moves. We making major moves. We going all in, like we got nothing to lose. We making moves. We making major moves. We making moves.
What is up, everybody? Merry Christmas 2023, coming from Mr. Man to y'all. Let me restart my intro because I don't even remember it. Alright? Clearly skipping over it. What is up, everybody? I am Mr. Man. Welcome to my channel. And I'd like to start off by wishing you guys again a very Merry Christmas and soon to be a happy false New Year's, because New Year's is strange times in January. January 1st is New Year's. There's no life starting in January 1st. People don't even want to be outside. The only reason they're out there is to go party for the 1st. Wake up midday on the 2nd. Anyways, let's jump into this. What I want to talk about today is when moon. I hear that so much. When moon, when moon, when moon. Nobody knows that date unless you're in the know of that date. It might not even be a date. It might be a time frame or a timeline or a time something. But what we can do is come to conclusions on what could be and will be catalyst for that when moon circumstance. So I'm going to go right to the horse's mouth here. We have Naveen Gupta from Ripple. And this is a conversation he had with, I don't remember this guy's name on his channel here. But what they're talking about is, what did I say here? So this is Naveen Gupta from Ripple. He's the managing director of the MENA region and Asia region. And we can see adoption in 3 years once stablecoins find their footing. This video had taken place last year, 2022. Meaning that 3 years is now down to 2 years. This is 2023. That brings us to 2025. Coincidentally, we have the re-evaluation of crypto assets and DeFi in 2025 by IOSCO. IOSCO had said this themselves at a panel with the BIS. So there seems to be some convergence taking place here at 2025. So let's hear what Naveen Gupta has to say. And I want to take you guys through the stablecoin journey into when possible a moon could exist. Not will, could exist, because I don't know any different. All right, I'm just reading, I'm just listening, I'm putting dots together, I'm creating timelines as I presented one a couple weeks ago here, and I'm trying to figure this out as well. All right, but at the end of the day, all I'm doing is learning. I'm teaching myself here, I'm teaching y'all over there. I'm teaching myself how to trade. I'm keeping myself current with real estate. I'm in real estate courses as well. I'm trying to stay current because in this ever-changing landscape here, the last thing you want to do is get blown up on a landmine because you didn't mind your footing. So let's jump in and hear what Naveen Gupta has to say.
Move from one point to another point. In fact, the way I see it is that when the internet revolution happened, we had ability to transfer data and information from point A to point B. What crypto has done for us is ability to transfer value itself from point A to point B.
True.
And hence there is no net settlement and no need for nostro vostro.
True.
Now it sounds absolutely convincing.
True.
But what I still struggle is why is the adaptability rate of this so slow? It's been more than 5 or 6 years.
True.
Most governments doesn't seem to be receptive towards it, neither financial institution.
True.
And what's surprising me the most is that even if you take a large multinational corporate, which has to manage its own treasury function across 20 different countries, can potentially use your solution very easily.
True.
So what's holding everyone back?
Absolutely. So there are two things that are holding it back. So one is local currency pairs, right? Okay. So I'll give you an example, right? So maybe 5 years ago, 4 years ago, when you will have $5 million XRP trading days, everybody would say that's brilliant, right? There is liquidity building up, but 5 million days. And now we have $4 billion trading days, right? So now what 4 billion essentially allows you to do is that you can disintermediate $4 billion worth of FX, just for example, by using XRP, similarly by Bitcoin, some other larger number, Ethereum, another larger number. But the FX markets are $4 to $6 trillion a day, right? So we are still scratching the surface in the overall orangutan size of the FX market. So, but it's moving at a rapid pace. So,
Okay.
so if you say, for example, the FX markets took, I don't know, 50 years to
Yep.
get to this point, definitely with cryptos it'll happen much quicker
What's
time. Right?
that timeline, Naveen? What are you thinking? I mean, at what point we will see that at least in the payment space, the crypto becomes the infrastructure for movement of value,
True.
or at least for the majority of the value transfer across the world.
Yeah.
Are we talking 5 years, 10 years, or another 50 years?
Yeah, I think to my mind, 3 years, right? And it's the combination of two things. So it's a combination of players like us,
Yep.
who are laying the infrastructure, laying the pipe, the sewage, sewage, the plumbing, and everything else. And then second, rise of stablecoins.
Okay.
Right? Because as the rise of stablecoin happens, then you have this, and these could be government-issued stablecoins as well.
Yeah.
Then you have something issued by the government where the institutions are not worried about risk. I mean, people are essentially saying, hey, you know what, I'm comfortable with this way, right?
Fine.
And then you're suddenly able to
The government issued stable coins will be coming from the west end of the world here. Those are like, they're basically air tokens. So you're getting airdrops. That is the government, the US government, and that is the Canadian government here. Because we in Canada do not hold gold. We have no reserves. So those are in government we trust. Same with the US. I don't know if, like, I believe that the US has gold. I believe it. But just because I believe it doesn't make it true. Because their dollar is not backed by gold. I don't believe they're going to come out with a stable coin backed by gold, or a CBDC backed by gold. Look at USDC as the prototype there. Not even prototype. That's going to be essentially along the lines of the US dollar. And what they have is a tokenized deposit, essentially. They have fiat as the reserve for USDC. They got government-backed bonds. They got different treasuries which are backed by the US fiat dollar to provide that stable coin peg for USDC. So that's how USDC gets its value, essentially. Same with the Canadian dollar. One of the Canadian dollars is going to be, that I've heard of, is QCAD. There's VCAD. I'm not sure if the exact same thing or different companies, but it's going to be operating on the Stellar blockchain, Ethereum blockchain, and Algorand blockchain. So what Naveen Gupta was talking about here is the trading pairs and the FX swaps. What do we have really as stablecoins, as US or as global sovereign currency stablecoins, right? We have like USDC, we have AUDD. Those USDC can ride XRPL, can also ride Stellar Rails. We have AUDD, which is also on the XRPL, which is on the Stellar Rails as well. There is EuroC from Circle as well. That can also ride XRPL Rails and Stellar Rails. And when you look at it, what else is there? There are no other swaps going on. Why? Because there are no other stablecoins yet. And if there are, there's not that many. So let's go see who is actually in the stablecoin business right now. Let's see. Stablecoin laws. 25 countries had legislation in place in 2023. Out of 43 countries analyzed by PwC, as many as 25 jurisdictions had stablecoin regulations in place in 2023. So US has state regulations in place in places like Wyoming, New York through the NYDFS. The industry of stablecoins or cryptocurrencies like Tether is going to implode. I don't trust that. I wouldn't recommend you guys do it, but that's up to everybody else. And USDC has seen, notice how they always say Tether and USDC. They're not saying the Canadian stablecoin. They're not saying the UK stablecoin. They're not saying the Swedish stablecoin, the African stablecoin, any other stablecoin, because these are the stablecoins, right? That's it. That's it. There's no swapping. There's no FX pairs. There's none of that. And y'all want to ask when Moon? There's not even a Congo dollar yet, you know? There's not even a Korean dollar yet. There's not a whatever. Has seen massive growth over the past year, with a market value hitting new all-time highs in 2023. With stable coins rapidly growing, global jurisdictions have been rushing to regulate the market, according to a new report. As many as 25 countries had stablecoin legislations or regulations in place in 2023, according to the PwC Global Crypto Regulations Report. And we've gone through this before, but I'll bring this up for you guys again just so we can go through this. Here's that PwC PDF, and here we're talking about PwC Global CBDC Index and Stablecoin Overview for 2023. So what I'm going to do is quickly pause it and scroll down to that chart that shows you the stablecoins and the jurisdictions that they are in. Okay, so if I get the chart, this is even better. Let's just see who has CBDC/stablecoins that exist in their jurisdictions. So here we have Bahamas and Eastern Caribbean. I've never heard of anybody saying, yo, I want to swap some Jamaican dollar, on the FX market. You could totally play that, but, why would you want to, really? Jamaica, Nigeria, mainland China. You have India and Ukraine, Thailand, Japan, Sweden, South Korea, Australia, the AUDD, Hong Kong, SAR, that's the EHKD, Russia and Israel, Singapore. Notice how they're all out in the east end of the world. Oh, France. What? What is this? Hold on, this is new to me, folks. The global CBDC project ranking based on the BIS indicates retail CBDC not applicable, wholesale number 4. Okay, that makes sense. I was wondering. I was like, France has a stablecoin? UAE, Canada. Yeah, the EU is working on there, so is the UK. The UK is coming out. We will get to that, actually. My partner just got home. She just texted me. So, what I want to do now, let's go through this. Right here. When Moon, okay? The oversight of stablecoins is an evolving regulatory area. In the UK, the HM Treasury, Her Majesty's Treasury, is set to grant the FCA, Financial Conduct Authority, the power to oversee fiat-backed stablecoins. Notice this says fiat-backed stablecoins. And what that means is the EUROC in the UK, right? While the Bank of England is developing a regulatory framework for a systemic payment system using stablecoins, the FCA is focusing on regulating the issuance and custody of fiat-backed stablecoins, including their use of payments under the Financial Services and Markets Act 2000. So that would be e-money tokens at that point, and the payment service regulations in 2017. Once these regulatory frameworks are in place, it is likely that individuals can be paid in digital payments using stablecoins, provided that the stablecoins and the related services provided comply with oversight and regulatory compliance. So now you know what we're waiting for. Regulatory compliance for stablecoins. Naveen Gupta had also said last year that he expects this to take off once there are stablecoin regulations. Here we are reading that we can get, once you start to get paid in stablecoins as well, because there's regulation behind it. There's now guardrails to keep within those perimeters set by regulatory guidance, which keeps the bad actors out, which keeps the crypto out, unless you're buying crypto from from an entity such as an institutional investor, such as a Blackrock, and through an iShares, an ETF, such as a Grayscale, such as a TD Bank, RBC, BMO, JP Morgan. That's where it's going to happen, because you and I of the world, we are learning and understanding crypto. We know how to use on and off ramps from our phone, jump into an exchange, swappity swap, we're done, we got what we want, we're out. That coin is off of the exchange and into our cold wallets. The rest of the people in the world, they look at that and, nah, it's too hard. When they can finally go into a bank and store their cryptocurrency in their banking app on their phone, you better believe they're going to want to buy it. And it's going to start off with ETFs first. That's the easiest on-ramp there is. You're not buying an individual stock, you're buying a multitude of companies within that ETF. So I wanted to show you, not that, this here, okay? So why is the evaluation of some of your favorite ISO coins not moving? And I understand that the coins itself don't adhere to ISO specifically. It's the company that has created these software and these projects that adhere to the ISO and interoperability and how these coins function. Okay, that's what's up. Stablecoin regulations will be a catalyst in the price action for projects such as XRP and XLM because you can issue stablecoins on their project there. You can create a coin such as Stably on the XRPL. We saw in Ukraine and we saw in Israel, I want to say, USDC flowing through there in terms of aid from the US government and Biden. Naveen Gupta of Ripple suggests stablecoin regs will move price. 3 days ago, this gentleman stated no bank will hold a stablecoin until there's regulations surrounding them. Think about it. A bank is going to take on risk. Huge risk like that for you and me. We're not that special. To you and I, we're special. We're somebody. To a bank, we ain't that special. All right, let's listen to what this gentleman has to say. This was from the Impact Conference held, I want to say 5 days ago now. I posted this 2 days ago, I believe it was. Unless it was yesterday. Between 4 and 5 days. Doesn't matter. Irrelevant. Just check this out.
To what the traditional experience is, where if you're launching a fund, you go to a government or a city and then bang, everything sort of gets set up for you, right? I think we'll get there in time.
One of the interesting ones that I think often kind of goes a bit unnoticed is as well fiat on and off ramps. So if you're Goldman, currently you can't hold a stable coin to actually do anything in DeFi or on chain. So once we have kind of, I guess, guidance and permission for banks to participate in the space, which I think is probably leaps and bounds ahead in the APAC region, then you'll be able to see more institutions come in because they won't have to worry about, what if the stablecoin depegs.
And you know who does have access to on and off ramps into the crypto world and realm? Blackrock. They are partnered with Circle. They are partnered with Coinbase. They can swappity swap, purchase and off, in and out, whatever they want, when they want, how they want, because they got that partnership. They played that game smart, unless it was set up for that. Probably likely that. So here now we have Representative Jim Hines of the stablecoin of Congress, the House here, and the stablecoin bill, and what Congress is looking for from crypto. This is what they're looking for. Okay, this was 2 weeks ago here.
We have this decentralized, and then you've had the prosecutions, there's just a lot of bad stuff. And then you've had the Wall Street Journal writing an overblown story about terrorist financing, which they subsequently sort of backed away from. I think you may have heard some of this from my colleague, Sean Casson. My point is this, just to make this 20-minute rant less than 20 minutes. If you really want to move the Congress, I say this to every crypto person who comes into my office, you got to start demonstrating the killer app, the value add. I get so frustrated because folks come into my office and they say, we have this decentralized finance, non-hierarchical structure that will allow for the transfer of NFTs, and it is like, I'm a Rhodes Scholar. I don't understand a single word you just said, right? So tell me how this makes Bridgeport better. Tell me how this makes Los Angeles better. And until the industry does a better job really showing that, look, we can take remittance fees down from 8% to 2 basis points, or show us any positive world improving application, the industry is not going to have the benefit of the doubt. And the reason you need that is because not so much on our side of the Capitol, but on the other side of the Capitol, the weather is uglier, and people just need to start hearing about how this stuff is going to make people's lives better.
So here we are now. We are at the 2023 APEC ministerial meeting. This had taken place in November 2023. Senator Himes, or Representative Himes, had asked, show me the use case. We want to help out. Show us the use case. How does this help California? How does this help? Right? If you guys remember, I hope you guys do remember. If you don't, I guess I'll bring it up as well. They had a homeless problem leading up to this conference in particular. And then all of a sudden, what happened with that? So here we have a video, just a quick video talking about now the expansion of road closures and security in San Francisco. Keep in mind, they were overrun with homelessness, right, and poverty there because things were way too expensive. Let's check this out.
it's going to be a lot going on downtown.
If you work in downtown San Francisco, you might want to rethink your commute in the next coming days when APEC Summit comes to the city.
I'm going to try my best to see if I can work from home, and definitely taking BART in because I can't imagine being stuck on the bridge.
Take a closer look at the official closures.
Those are going to be the eastbound 80 at 4th Street off-ramp and then the westbound 80 at 5th Street off-ramp. Now, these closures are scheduled on Wednesday, Thursday, and Friday of next week from approximately 5 a.m. to about 9 p.m.
That's because the two ramps directly feed into the area surrounding Moscone Center, where the summit will be held. The other closures include
the left lane on eastbound 80 on the San Francisco-Oakland Bay Bridge, and then the far right lane on westbound 80.
As for the Golden Gate Bridge, the Golden Gate Vista Point will be closed.
While there is no vehicle or pedestrian access into the Vista Point on the northeast side of the bridge, the pathways that connect the Golden Gate Bridge to the Marin Headlands as well as into Sausalito will remain open.
Remember when...
So, who gets that kind of prestige that they can close roads in California, cut off a perimeter that they can chat and do what they want to do? They must be prestigious. They must be somebody with some kind of pull, right? Are they Californians? Are they you and me's of the world? Who are these people? Who are these people? Representative Himes? Let's see who it is here. San Francisco, right on the San Francisco government's page here. Mayor London Breed recognizes Ripple's significant sponsorship to APEC Leaders Summit in San Francisco. Ripple has that kind of, they got that kind of like, you know who I am? They got that kind of pull. They can close down roads like that. Yeah, and some people in other factions, if you will, or other crypto projects, if you will, are like Ripple's a shitcoin, XRP's a shitcoin. Ripple is dumping. They clearly don't understand and know what's going on. They don't follow business. They don't know business. They don't know how to sustain yourself through a bear market here. They don't own real estate. They don't own certain things. They don't know how the money moves. But Ripple's a shit company with a shit coin. Meanwhile, the mayor of California here is recognizing directly on their page, huh? Please show me any other crypto company that can get that, right? Just moving on. I want to get to this one here. So we were talking about the on and off ramps now of stablecoins, of cryptocurrencies, of and I want to show you guys how that works, because this lady here, this is Samara Cohen. I've been checking out her stuff because she's intriguing. I had this bright idea that, you know what, BlackRock is the in business of banking in this world here. Not banking, but like asset management, if you will. And I went through their team. I started reading who they are, and I was like, okay, yep, you're somebody of interest, you're somebody of interest, you're somebody of interest. And I came across her and I said, CIO, Chief Innovations Officer of ETFs and Index Funds. And I was like, huh. Right now, the big thing is ETFs and index funds, whether futures or spot. And I was like, let me listen to some of the stuff you have to say, because this is what we're living through right now. And what she has to say astounds me. This one here, and I'm going to show you another segment of part of this same conversation. She's having a chat here with an individual from Chainalysis, okay? Check it out.
When you, obviously you spend most of your time looking at traditional markets, and when you first saw sort of applications tick in on a Bitcoin ETF to the SEC, what was sort of your reaction to that? Did that make sense? And yeah, what was your initial reaction?
Sure. Well, I guess to your point, when I first learned about crypto, it was actually, prior to my being in an ETF and index seed. But I think where my head really was around the impact of permissioned blockchains in particular to lots of parts of financial services. My kind of prior world was in the derivatives market. So lots of areas where there was definitely a need for reduced friction, counterparty trust, more transparency. So I think, at the time, again, very much kind of supportive of work that was unfolding across the industry around permissioned blockchains. And when, talks started happening around crypto ETFs, and this was even prior to applications being submitted to the SEC, I was actually pretty surprised, because one of the things that makes me so excited about the ETF is the fact that it provides access to, hard to access, expensive to access, or even inaccessible markets. And, crypto is like pretty transparent and accessible. That's the promise of crypto. It doesn't take too long to, I timed myself once, and I think it took me like less than 2 minutes to set up an app on my phone, link my bank account, and trade something. And so that was my first reaction. Like, what is the incremental value the ETF wrapper offers to crypto? And I think subsequent to that, one of the things I've learned that I hope is also a theme and a takeaway from this conversation is the real importance to investors of interoperability. Like, it's an easy thing for a personal investor to set up something and access a new asset class, but actually for institutional investors to kind of adopt and do diligence on a whole new market structure is quite difficult. So the ETP wrapper, and we would call it actually an ETP, exchange traded product, versus ETF, because it's not actually a fund in this case. But that wrapper does have the benefit of providing these kind of legacy, well-traveled on-ramps and off-ramps. So that's kind of what my journey has been around it. And I should add, though, since you mentioned the SEC applications in particular, again, the importance of investors understanding what they're buying. Because in the case of the US, many of you may know this, spot crypto ETPs or exchange-traded commodities, ETCs, aren't available in the US. So what is available are futures-based Bitcoin ETFs. And from our perspective then, an investor who is looking to get spot Bitcoin exposure needs to understand that given the regulatory position limits for Bitcoin futures, they won't get that exposure in a futures-based ETF. So from our perspective, it wouldn't be, it wouldn't meet what I think investors are looking for in a Bitcoin ETF.
All right, so now we have the on and off ramps there. And I did want to go through MiCA quickly, just very quickly, and then I want to jump back to her again. What she has to say next is just mind-blowing, to me at least, because I know you guys understand things the way I do. I'm not the only one who understands these things. What I'm good at is just putting the puzzle pieces together to help present it to you guys. And as you're watching it, I'm sure you don't even need my commentary. You can figure this out as we go. So MiCA is being rolled out in phases. Where is my mouse? There it is. MiCA is being rolled out in phases. So the overview of MiCA consultation process, which had taken place. The first package will be launched in July 2023, right here. ESMA, oh, sorry, my bad. Here we go. Here's the page I'm on the ESMA page here. The European Securities and Markets Authority here, official page. I didn't Photoshop any of this stuff here. The second package by October 2023, and third and final consultation package, which includes the MiCA mandate with an 18-month deadline, will be published tentatively in Q1 2024. So what I'm waiting for, because we keep hearing stablecoins will be a catalyst. Stablecoins will be a catalyst for price movement. At that point, June 2024. Did I say June in here? Let me see. I know it's June. But did they say June in here? That way you guys can see it yourselves. Nope, they just say Q1 here. I've shown it numerous times though. The third and final consultation package is expected to be published in June 2024. This says Q1 2024. That's not even June, so that's what? January, February, March to March. Perfect. So they have the third consultation package rolling out Q1, and then in June we have the stablecoin, I guess, regulation rollout implementation at that point, which is the asset reference tokens and e-money tokens. Okay, so that's how MiCA fits into this. Here's their timeline. So show you them here. Pause it, and let's keep going, all right? This is take 3. Yesterday I was recording, and after the spiel there about MiCA and the exploded image of the roadmap there, I paused the video and continued on as if I was recording. Never unpaused it. Prior to me telling you this right now, I was recording for, again, 5 minutes, and the mic was muted at that point. You know what? It was too much. It was too much. I was like, nope. Need to leave this where it is. Allow it to let it lay down, let it lay to rest. Whole new day. Gave myself a time to chill, time to pull back. Here we are. I need you guys to know who this woman is. This is Samara Cohen. This is the Chief Investment Officer of ETFs and Index Investments. That's who we are following now, okay? Samara Cohen, Senior Managing Director, is the Chief Investment Officer of the ETF and Index Investments business for Blackrock and a member of the firm's Global Executive Committee. So this woman, when she started her career out of school, literally out of school, she started off with Blackrock. I believe she was there for 2 years and then spent 15 years at, I want to say Goldman's. That's where she was. And then she's now been back at Blackrock for 7 years and still currently with them. As the Chief Investment Officer for the EII program they have there, Samara leads the teams responsible for delivering market quality and investment integrity of BlackRock's index funds and iShares ETFs, encompassing portfolio managers, risk managers, platform architects, market structure developers, and product operating model designers. These teams seek to lead in modernization of the index industry and ETF markets to help more and more people achieve financial well-being, which drives more and more people to their investments, right? The more money that flows through their products, the more money they're making and earning. And man, this is wild. So Samara is a member of the EII Management Committee of BlackRock's Global Markets Executive Committee. She also serves on the Global Diversity, Equity, and Inclusion Steering Committee and is the GEC senior sponsor of BlackRock's Women Initiative Network. I don't even know what that acronym is. A lot of these are new. Samara first joined BlackRock in 1993 as an analyst in the Institutional Client Business Group. Prior to rejoining BlackRock in 2015, she was a managing director in the securities division of Goldman Sachs. She served as the Chief Operating Officer of Fixed Income, Currencies, and Commodities, Americas Sales, and led the Global Market Transition Team, which developed and delivered solutions to clients in an evolving market structure and changing regulatory environment. This is the woman to follow for ETF information. Previously, Samara worked in interest rate products at Goldman Sachs, where she was responsible for developing strategies in interest rate and derivative markets for a broad range of institutional clients, including banks, insurance companies, asset managers, and hedge funds. This is the woman to follow. We are in a landscape now where the talk around the SEC, talk about legal clarity, talk about people coming onboarding, on and offboarding for crypto and into crypto and back to TradFi. ETFs are how they're doing this. ETFs will be the thing to get people onboarded, whether it's you and I or the institutional investors that are investing into BlackRock's funds. Okay? Samara earned a BS Econ in Finance from the Wharton School and BA in Theater Arts from the College of Arts and Science of the University of Pennsylvania. She earned an MBA from Harvard Business School. All right, Samara. I see you, girl. So in this segment here, she dropped some news about stablecoins for me. I will do my best to stop it, pause it, and gather my interpretation of it and provide it for you guys. I don't want to provide a bias for you and what you think based off of what she says. I just want to give you guys a different frame of reference and a different, other ideas, really. You're going to have your own. You might have your friends you chat with, and now I can give mine. So now you can create and form and mold and shape into what you need. Whether you think what I have to say is real or not, that's totally up for you to decide.
About maturation and providing easier access, and also providing the right product for the right person that matches their expectations. When you think about sort of, BlackRock is very much about empowering people and making sure that they can get their financial health and well-being, and actually broadening access, like the ETF broadened access very much in this country.
So I want you to listen to their language now. In the previous clip, they were chatting pretty fluent, just off the cuff chatting. But now you can tell that they, or at least to me, it seems like they are thinking about words to say as opposed to just saying words. They'll use words like, filler words to give them that few seconds to continue thinking, let the wheels turn, grab words for what they need to fit into this narrative here, as opposed to giving the entire game. But if you take your time, pull away and listen to what they're saying, they'll give you the game.
What are the opportunities that crypto does present for BlackRock's business?
So look, I think that there are four. We've talked about, native crypto. We've talked about permissioned blockchains. I think that tokenization might be the kind of longer term opportunity, but I think that's a really exciting one. Making asset classes accessible that have been previously inaccessible. That's a real possibility, I think, with tokenization. And the fourth we did talk about a little bit as well. I think that is.
So here we have an article from March 2023. Yep, right there, March 1st, 2023, 10 a.m. Eastern. We have Larry Fink, and this article says, Larry Fink says tokens are the next generation for markets. Yeah, no doubt. BlackRock here giving the game, and I got a bunch of pop-ups popping up. The CEO of BlackRock, Larry Fink, recently said that tokenization will be the next generation of markets. If you think of tokens as Bitcoin or pictures of chimpanzees with sunglasses on, you might as well think that the man who runs the biggest asset management company with $7 trillion under management is out on a limb. But if you think of tokens as digital assets that can be traded via protocols, you may well agree with me that the view is accurate, credible, and inevitable. It may sound hyperbolic, but I'm sure that the future will be tokenized. Not ideology, economics, right? So that's what Larry Fink says. So he comes out with this next. All right, this was in October. JP Morgan debuts tokenized BlackRock BlackRock shares as collateral with Barclays. These guys don't joke around. BlackRock said tokenization of money market funds shares as collateral and clearing and margining transactions would dramatically reduce the operational friction in meeting margin calls. What? Okay. Now we're jumping back here. We just have to veer off quickly because I wanted to add some context to what she was saying.
That is stablecoins. And I think that's quite interesting because, again, from an adopting investor's perspective, the stablecoin kind of removes some of the unknown price volatility of the kind of digital native currency, but allows for an on-ramp and participation in the digital ecosystem, which actually, can have potentially very big benefits, particularly around payments.
Yeah, and we've seen, we saw that you announced a partnership with Circle, an investment there, and then obviously the backdrop of UST sort of collapsing last week. How do you differentiate? I mean, clearly, you chose to sort of invest.
So we heard Samara Cohen's talking about on and off ramps through their partnership with Circle, sorry. So I went to perplexity.ai here. I love chatting with this thing. not even chatting, you're just typing and it just gives you stuff. So Ripple, XRP, and USDC coin are connected through various partnerships and trading pairs. Recently, Binance announced the partnership, the pairing of Ripple, XRP, they still call XRP Ripple, as in back in the day it used to be called a Ripple before it became XRP. Pairing of Ripple, XRP, with USDC. You can't pair USDC with Ripple. It's based off against the currency. Ripple has an IPO, so you can't pair it against that company at all yet. Like, come on. Allowing the two assets to be traded together on their platform. Additionally, SBI Holdings, a firm with a strong belief in Ripple and XRP, now they said XRP, has partnered with Circle, the issuer of USDC, to promote the use of USDC in Japan. These partnerships and integrations indicate a growing connection between Ripple and USDC in the cryptocurrency market. So we know they're connected. Indirectly connected.
In Circle and back that, how do you think about the different forms of stablecoin, and how do recent events sort of impact your thinking on this space?
Well, importantly, I think the importance is to differentiate. As you said, there are different types of operating models, and for us, really, the past several years have been around, engaging as thoughtfully, and as well as thoughtfully as we can with really great partners, like you, for example. And also like Circle. And so kind of understanding the differences between an algorithmic stablecoin, a collateralized, centralized stablecoin, which is what USDC is, and the relative performance of those two in a very volatile market. I think that's very instructive for the market, for investors. But one thing
I just wanted to stop here for a second because she was talking about USDC being a collateralized stablecoin. I'm sure some of you guys might not know what a collateralized stablecoin is. So I just went to AI again here, Perplexity. Yes, so the XRPL can move collateralized stablecoins. For example, Stably, USD, that was a stablecoin minted on the XRPL or created on the XRPL. A stablecoin pegged to the US dollar has been officially launched on the XRPL. Each Stably USD token is fully collateralized one-to-one with USD, held in bank deposits managed by the custodian for the benefit of token holders. This integration allows users to mint and redeem Stably USD tokens via Stably's non-custodial wallet application on the XRPL. Additionally, institutional users can create a Stably Prime account to mint and redeem XRPL Stably USD, along with other assets such as USDC, USDT, Bitcoin, and ETH. Therefore, the XRPL supports the movement of collateralized stablecoins, providing users with access to a variety of stable assets for different use cases. But remember, they're all backed by the US dollar. It's just collateralized.
thing I do want to point out, and this is something I have lived with in the ETF world, and my colleagues sometimes laugh at me that I get so strict around what I will allow everybody to call an ETF, and we're very much public on the record saying there should be a better labeling system. I would kind of propose the same thing for stable coins and for digital currencies, because as much as I agree with Michael's point that what happened last week was quite isolated to Terra and to Luna, the fact is it does have an impact from a trust, confidence, and reputational perspective. So again, labeling, transparency, industry standards so that investors understand this very profound difference in operating models, I think is another, TradFi learning.
No, we love the TradFi learnings. But thinking about less TradFi and maybe into the future of TradFi, the space moves so quickly. You've had different strategies and engagement with the space over the last, as you said, 7-8 years as a firm. How do you think into the future about BlackRock's involvement in the industry?
Well, as much as it feels like the space is moving quickly, as I said earlier, markets evolve over millennia. So I think the important point I want to make is, TradFi is not going away. And so I think for, all of you here, for us and our partnership and conversations, thinking about and planning.
What she means is TradFi is not going away for now or right now, because it is. It'll eventually go away and it'll all be digital. We are the transitionary generation here, all right? That's what a collateralized stablecoin is. It's an air token still. Canada has it, US has it. Out in the East, they have digital currencies backed by gold. We don't got that shit over here, all right? We are corrupt. Canada, US, the Americas, they are corrupt. They got air tokens going on. But yes, TradFi will be gone. TradFi, traditional finance, that will be gone. No doubt about that. I'm not sure if that'll be in our time, my time, I'm 40 years old, or if it'll be after me. It takes millennia, she says. It moves over millennia. I can double tap the power on my phone now, scan my face, and all my debit cards are now virtually on there. Eventually that plastic copy won't need to exist because they got us on there already. There might be a couple updates soon on the Apple, of the iOS firmware. At that point, you update your phone and eventually becomes, you don't have to do, and your bank is, we are now partnered with so-and-so. You don't have to use the plastic anymore. It's now, you can just carry your phone. It's legal, it's good. And they're doing the same thing soon too with your driver's license. Like, I've been playing around with this stuff just to see what it's like and to see what it is, to see what's coming up. I've been learning a bit about the digital identity. Yeah, anyways, back to it. Banking will go away. The online TradFi will go away.
Planning for the interoperability of the ecosystems is critically important and will surely shape any path of adoption that happens over the next couple of years. I actually thought it was super interesting hearing all, like, three of the speakers earlier who referenced, I'm going to get this wrong, but like multi-chain interaction, because as important as that is, it presumes a crypto-only ecosystem. And I think from an investor's perspective, what really matters is like the interoperability of the crypto and the TradFi ecosystems, because that.
So she was just talking about being chain agnostic as well as TradFi agnostic. It can go from multi-chain and it can go from chain back off chain to regular world, traditional finance. So is the XRP. Is XRP interoperable, as she said, holding her hands like this? The XRPL is not inherently chain agnostic. XRPL is not, okay, as it is specifically designed to be the decentralized ledger for XRP. However, it does support the issuance and trading of various assets, including stablecoins like USDC, through the decentralized exchange and smart contract functionality. This means that while the XRPL is built around XRP, it can accommodate other assets, making it versatile and interoperable with different digital currencies and assets. Additionally, some projects such as Xspectre aim to become chain agnostics and incorporate various blockchains onto a truly inclusive platform, including the XRP ledger. And here is the other interoperable, or another. So the Xamin, on and off, Xamin, it's now the Xamin wallet. Used to be the Zum wallet on the XRPL. On-off ramp service provided by XRPL Labs in partnership with GateHub allows users to move fiat currency and various assets to and from the XRPL. This service enables Zum Pro users to quickly and efficiently send fiat currency, including euros, to the XRPL and convert XRP and other assets back into fiat, facilitating the transfer of funds between the XRP ledger and other supported networks such as SEPA. Right? Other supported networks such as SEPA, Swift, Bitcoin, and Ethereum. Interesting, isn't it? Just interesting. This partnership aims to streamline the on and off ramp process, increasing the adoption of XRP and other digital assets across the DeFi ecosystem, and fostering seamless value transfer between the XRP ledger and other supported networks. Therefore, the Zum on and off ramp service provides a convenient and versatile solution for transferring funds to and from the XRPL and other networks. Bam. Ba-dam, bam. Okay.
not only be a reality for the foreseeable future, I think how well those on-ramps and off-ramps work will actually inform crypto adoption and confidence.
Yeah, and I think, like, to your point, we start to see sort of the incarnation of TradFi assets like stablecoins being sort of that bridge, if you will, between sort of traditional finance and the crypto industry, and so seeing real.
So the gentleman was shouting about having the rail set up, interacting with having a stablecoin interacting with the real world, or TradFi as they call it here. So USDC, a stablecoin pegged to the US dollar, interacts with traditional finance in several ways. It provides a bridge between the highly volatile cryptocurrency ecosystem and the traditional finance world, offering a stable alternative to fiat currencies. USDC is favored by many unbanked individuals as it allows them to access a cryptocurrency that represents the price of USD without the need for a bank account or traditional financial tools. Additionally, USDC has gained popularity for international remittance and payments, and its foundation on the Ethereum blockchain enables quick settlements, offering an efficient alternative to traditional banking system. Don't forget the XRPL, as we just read. Furthermore, USDC has found significant adoption in emerging markets and countries with rapidly growing economies, where it can be used without concerns about the local currency's inflation or political conflicts with the US. Yeah, that's true, because it's not the US dollar being stopped from sanctions. It's a dollar representing the dollar in partnership with Blackrock, who owns the world. Girl, hold on. Yeah, na 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 na.
Brand names look at ways to support that and think through what those standards should look like, how to better position the expectations the markets can place on those types of assets will change sort of the landscape of both TradFi and also the crypto industry. So we're very excited to have those definitions and to really make sure that there's concrete expectations being set into the market. Many people who are maybe less familiar with BlackRock maybe don't know that there's a very large technology business that is also part of BlackRock, and maybe explain a little bit about like how that functions and how that makes BlackRock different. But is there a world in which this is also a technology play for BlackRock long term?
Absolutely. I think it's probably a technology first play for BlackRock. And look, actually, I said that I've been at BlackRock the past 7 years, but I've had basically 2 jobs. BlackRock was the first place I went to work after college. Then I went to business school, worked at an investment bank, so I was gone for 18 years, and then I came back to BlackRock. When I first started at BlackRock, it was shortly after BlackRock's founding, and I think this is important because as much as BlackRock was founded as an asset management firm, technology and best-in-class risk management tools were very much the DNA and the founding purpose of BlackRock, which was a bond expertise shop basically at inception, with the desire to, at this time, the fixed income market was quite volatile, maturing rapidly. Mortgage-backed securities, different types of mortgage-backed securitizations were increasingly being adopted, and BlackRock's founders really wanted to bring best-in-class risk management and asset management expertise directly to investors. So that was really the founding mission. So Aladdin, our technology business, wasn't something new that was started later. It was like the bedrock of portfolio managers and risk managers at BlackRock. And then, the firm made the decision to provide Aladdin as risk management infrastructure for other asset managers, who managed assets on behalf of others. So just to frame it, that's the like as I said, that's the DNA of our firm. So I think engaging thoughtfully with new and innovative technologies, not necessarily being first to market, but being best in class when we get there to provide better management of risk and financial outcomes for our clients. That's why we come to work every day.
That's why they come to work every day. All right, you guys, I hope you all found some value in this. I am extremely hungry now after 4 takes of this video. Finally got it to work. I'll catch you guys in the next one. Love y'all.
We making moves. We making major moves. We making moves.